Panorama asks who reaps the spoils of war as Britain's building societies race to become banks.
Savers throughout Britain are receiving offers they can't refuse. Mutual building societies are becoming profit-driven banks. Millions will get handouts of cash or free shares. But is there a catch?
There's no such thing as a free lunch in this world, and in the long run, you might get the short-term apparent freebie, but you'll pay for it over the longer term.
As Britain discards part of its heritage, Panorama reveals the winners and losers in the battle of the bonuses.
Members of the National and Provincial Building Society will vote today on a planned takeover by the Abbey National. The NMP don't expect a big turnout of savers and borrowers, as most members have voted by post.
Bill Smith is a member of the National and Provincial Building Society, owned by its customers and run for their benefit. It's being taken over by the Abbey National, a big company owned by stock market investors. Unthinkable 10 years ago. Bill Smith is opposed to the deal and is going to travel 200 miles from his home in Reading to Manchester to vote against the takeover.
There has to be somebody that stands up and says, this is not right. What we are being asked to do is to sell our birthright. 200 years of providence is being discarded to nothing more than mammon. These societies were built up by the providence of past generations of members, and there is no justification that the membership in a small or narrow window of time, probably inflated by an influx of what has been described as carpetbaggers and chancers, should really reap the benefits.
Building societies represent Victorian ideals of self-help and self-improvement. Working people were encouraged to save through building societies and to buy their own homes. Interest rates to borrowers were low because the society's profits stayed in the business. They were mutual organisations owned by their members. The idea of mutuality was a simple one. In rooms above pubs, in church halls and in churches like this one across the country, building societies encouraged ordinary people to deposit their savings. This money was then lent out on mortgage to help people buy their own homes. The idea recognised the mutual interest between borrowers on the one hand and lenders on the other. The aim was prudence, not profit. There were no shareholders, no dividends, no highly paid directors. No wonder the idea caught on. But now all that is about to change. The city, please. Building societies today are swapping members for shareholders in an unprecedented rush to turn themselves into banks. 6 out of Britain's top 10 societies, among them the National and Provincial, the Woolwich, the Halifax and the Alliance and Leicester, plan to become public limited companies. It's a huge change in the British financial system and indeed in the whole of British society. In total, more than £20 billion is going to be given away to building society members to encourage them to give up mutuality. The risk is that by throwing away 150 years of history, in the long run, we'll all lose out. Historically, building societies have brought home ownership within the grasp of millions.
You realise that usually for less than your present expenditure on rent, you can be buying your own home.
The idea really took off in the 1930s. The big booms in house buying before and after the Second World War were funded largely by the non-profit-making building societies. Typical of the millions of people they have helped are Thomas and Mary Smith. They have lived in the same house just after they were married. At first they were renting it, but now it belongs to them. They were part of the big shift away from renting from private landlords towards owner occupation. Thomas served in the Navy during the war. When he came out, like all servicemen, he received a gratuity. It was just over £100.
We'd never had so much money, all in one piece. We never had so much when we got married. So we decided we would put it down so that we could buy our own house. And instead of paying rent, we would pay to the building society, and each week it was becoming ours instead of being somebody else's.
How were it for people then to buy their own house?
It wasn't right common at all. And I don't remember any of our family up to then that ever owned the house. Without the building society, we would never have been able to buy it.
Building societies were part and parcel of making home ownership an attractive thing for ordinary people, whereas in the main, prior to that, the only thing that people could do was rent. And renting wasn't a particularly good thing, because it was predominantly small landlords who didn't maintain their houses, so we had a very decrepit housing stock. Whereas home ownership was about expansion into new dwellings, and people saw a dramatic transformation in their lives.
There is little doubt that the enormous growth in home ownership, today nearly 70% of us own our own homes, would not have happened had the sole source of mortgage finance been profit-motivated banks rather than mutual building societies.
By the end of the 70s, the building societies had over 90% of the mortgage market, and they've done this by being the institution that was around all the time within the mortgage market. We'd occasionally seen periods when other financial institutions had come in during booms and sort of cherry-picked mortgages, but it had been building societies that had consistently lent to homeowners, and so their role in terms of the expansion of home ownership was absolutely crucial.
Historically, building societies were highly regulated. This restricted the amount they could lend and the services they could offer, leaving the banks free to eat into their market. The Building Societies Act of 1986 was designed to help the societies fight back, making it easier for them to borrow money and to provide a wide range of savings and financial products, such as unit trusts. The chairman of the House of Commons committee which helped create the new law was Ken Weech. Like all MPs, he believed he was helping societies to survive as a mutual alternative to the banks. Instead, he unwittingly signed their death warrant.
The Building Societies Act of 1986 has been a failure, and its purpose has been completely subverted by financial predators and lawyers who've been able to get round the small print. It has failed because we were too complacent then about the obstacles and problems that faced us. There were already people waiting in the wings to bring about financial changes, which frankly, on that committee, we didn't foresee.
A string of court cases blew holes in the Act. A key case challenged the idea that only members of 2 years standing could benefit from a switch to PLC status. The court ruled that all members could benefit, including those who had joined the society simply to get the bonuses paid on conversion, a change these members would almost certainly vote for.
They have managed to bribe building society members with their own money, but they have done it in the form of giving bonus shares. And in this way, they got round the Act in a way which we did not foresee.
You and all of your colleagues were in favour of keeping building societies as mutual organisations. I mean, you must carry some responsibility for this failure.
I'm afraid I do carry some responsibility. There was no political arguing about the Act. What we were trying to do was a bit of good, frankly, so that we kept the best of what was in the building society movement for the owner-occupier in Britain. That, I'm afraid, we failed to do.
The Abbey National Building Society has set the price of its shares at £1.30 for its flotation on the stock exchange next month.
The Abbey started the fashion in 1989 by being the first to ditch mutual status and launch itself on the stock market.
If you're an Abbey National qualifying member, you'll soon be offered extra shares in addition to your fee shares in Abbey National PLC.
The Abbey showed the way and provided the arguments for those that were to follow. They claimed that becoming a public limited company gives them the freedom to compete in the fast-changing personal finance market, though so far there is little evidence to support the claim. In the last 2 decades, the banks have taken business from the building societies, but the 1986 Act has allowed the mutuals to fight back. They can now provide every type of personal finance product, and they compete very successfully with the banks. What's more, research from the Consumers Association shows that mutuals give customers the best deal on, for example, savings accounts.
You would have earned a substantial amount more interest over 5 years with an average building society account than with a bank account. And that is an attractive one-off cash windfall.
where Mutual becomes a bank.
A very good short-term return on your investment. However, what we're trying to do is say to people, that's not the whole of the story. Take a step back and think about the longer-term impact on your own savings or your own mortgage. I mean, if, for example, you add up the difference between being with an average building society to an average bank on a TESA, a savings account, and an average £60,000 mortgage, the difference on average of that is about £1,500. That's how much better off you are over a 5-year period staying with the building society. Now, if you think that a mortgage is a 25-year product, you're actually over the long term going to make more money by being with the building society and maintaining your mutual status than you are if we find everything becoming like the banks.
This challenges the whole idea of converting from a mutual to a bank, but the Abbey argue that price isn't everything.
Consumers Association can always pick the best of any product available on the high street, and I would say that one can always go somewhere and find a product lower, but one has to look at convenience, one has to look at service, one has to look at where the branch is located, and the full range of products.
But the full range of products comes at a price. Over the last 10 years, savers with banks have lost more than £24 billion of interest because they are not mutuals.
As soon as a building society sheds its mutual status and converts to banking status, they then have a third party in the equation. They've got to be paying out dividends to shareholders every year, and that accounts for a very significant part of their profits. Whereas within the case of a building society, they can be using that money to reinvest in the company and to benefit borrowers in terms of things like loyalty bonuses and better rates.
In the last few months, some societies have woken up to the idea that mutuality can give savers and borrowers a better deal.
The Nationwide, which says it's committed to maintaining its building society status, announced a cut in its mortgage lending rate of almost half of 1% to 6.99%.
Mutuals like this are convinced they have the competition, the banks and public limited companies, on the run.
Since Bradford and Bingley and Nationwide, and now along with the Yorkshire and also the Derbyshire and Coventry building societies, have all decided to price as the way they have, giving the mutual dividend back to the members in terms of better pricing, they suddenly realise they can't follow. We've basically got them by the short and curlies. If they drop to our rates, their share price in the case of Abbey National, or a potential share price in the case of Halifax, will almost halve. If they don't follow us and keep their margins wide so they can preserve their profits, they will lose business and market share.
Are you not vulnerable that you're competing in a marketplace with a group of savings institutions and mortgage lending institutions that do not have outside shareholders and therefore do not have to provide a return to them, and they have got a competitive advantage?
That argument is absolute rubbish and nonsense. Let me tell you why. First and foremost, we don't have a business without customers. Customer is king. If the customer doesn't come into our branch, we don't have a business at all. Therefore, we've got to be competitive. I told you that we open bank accounts, credit cards, foreign exchange, personal loans, and so on. Why do our customers come into our branches? Because they like it. If the customers do well, and we serve them well, and we're efficient and effective, and they come back to us again, then the shareholders will benefit.
But national and provincial savers such as Bill Smith have received some disturbing news about the merger with the Abbey. The transfer document setting out the terms of the takeover admits Abbey National rates to savers at present are on average slightly lower than the equivalent rates currently offered by the national and provincial. And since then, the NMP have cut their rates to savers. Now they are in line with the Abbeys. At the meeting in Manchester, NNP members were being offered one-off cash bonuses of between £500 and £5,000 to vote their society out of existence and support the takeover. In these circumstances, the result was a foregone conclusion, and the vast majority of members stayed at home, sending in the vote by post. Less than 500 turned up on the day.
Well, as expected, there was a big vote in favour of the merger, even though most of the people here today at the meeting were against it, wanting to keep the society as a mutual organisation. But the postal vote was decisive.
Well, we voted for the resolution, and mainly because of the payout, to be quite honest. We've not thought about the other implications. We have got a mortgage still, but it's not got long to run, and we're just hoping it won't affect it too much.
Why did you vote? For the same reason as my wife, really, because of the payout. Maybe a little bit selfish, but we should really think of our grandchildren and the next generation. But we survived.
I voted for, because I'm one of the terrible speculators. I put my money in the account with just £100, hoping they would change over.
So what, you made £500 on your money?
Yes.
You don't feel guilty about that?
No. I do feel that the society will go down once it becomes a bank. The people won't get the same interest rates, so I will always keep my money with a proper building society.
One day there might not be another mutual left, and then everyone suffers. And that's why they should perhaps think twice before just acting on their selfish, greedy instincts. There's no such thing as a free lunch in this world, and in the long run, you might get the short-term apparent freebie, but you'll pay for it over the longer term.
And it's not just the money. The service national and provincial provides its customers will also change. Wyn Mooney has lived in the Cotswold village of Bourton-on-the-Water all her life. It's 16 miles to Cheltenham, the nearest big town, but a 10-minute walk to her N&P community branch at a local estate agent's.
I get a friendly service, and if I want any advice, they're quite willing to give it.
Good morning. Good morning. May I? Good morning, please. Yes, thank you.
You get a service with a smile, and that goes for a lot. You can just go in and have a chat.
Lovely day, isn't it? Grand.
After the Abbey became a PLC, it closed over 1,000 of its own community branches. Now it's taken over the N&P, it will close all of their 200 community branches as well. This was the last Building Society branch left in Bourton. 850 local N&P members will now face a long trek into Cheltenham. Bourton is a community with a lot of elderly people, many of whom are concerned about the closure.
You just can't jump on a bus willy-nilly. You go into town, you have to stay in town for 2 hours before you get a bus back. And that is costing money all the time. And people just can't afford to do that when they're on pensions.
I'll have to rely on my husband leaving me some money, because otherwise it means dragging, well, 3, soon to be 4 children into Cheltenham.
For elderly people, it's very convenient, and it's a friendly service. And I go there weekly, sometimes 2 or 3 times a week, yeah. Well, I think it's very sad. I really do.
We will close community branches. Community branches are branches in estate agents, and Abbey National, when I joined Abbey National, we had several thousand of those branches. We have closed them because they've been inefficient for us.
I don't know why they've been inefficient, but certainly we've provided a service to the community, which is what we wanted to do, but perhaps we haven't made enough profit for them, and of course now they're going public, they have to make big profit for their shareholders.
They provided a service to the members of the Building Society, and that is a service that will disappear, a clear disbenefit of this merger.
That may be true, but the benefits from this merger are that we have a telephone operation, we have a postal operation, we have machines, cash machines and dispensers around the country, situated outside supermarkets. And so today, with a 24-hour telephone service, one can conduct one's financial transactions from a small village extremely well and very efficiently and effectively.
You can't send money down a phone. If you want money straight away in emergency, you want to be able to go in and get that cash. They haven't lived in an area like we live in. If they came and lived in these sort of areas, then they would understand what we are trying to say.
But the concerns of people in Bourton-on-the-Water are a long way from the ambitions of those who run the building societies which want to become PLCs. They claim they need to become banks to get the capital to diversify into other businesses, just like the Abbey did.
We bought Scottish Mutual. We've also bought First National Finance Corporation, which is consumer loans. And we've also invested in general insurance in a joint venture with Commercial Union. Now, you could argue that today we could do all those things as a building society, and indeed we can. But at the time you couldn't. We couldn't buy a general insurance company, and we can now. And we did. And that's been very good for us. But as a mutual, we would have used all our reserves in buying those companies, and we'd have had no more cash in the bank to sustain the ongoing business.
Of course, the Abbey could have moved into new business areas without becoming a bank, but it would have taken longer. By turning itself into a public limited company, it became a big city player with a very large chequebook. But the cost of some of its diversification has been very high and is a powerful reminder of the dangers of such a strategy. Take the time and you can work out the hundreds of millions of pounds which the Abbey has lost over the years from its own published accounts. That's what Norman Bernard, a management consultant who helps devise strategy for major multinationals, has done.
Where the Abbey has fallen down is in its diversification. Its adventures in Europe have been very unsuccessful. They managed to lose several £100 million in Europe.
That has been a difficult learning curve for us, but we are a very large organisation. We actually have over £100 billion of assets. Difficult to understand such a large number, but we feel that it's important to have a presence in Europe because we do believe that a European community will happen at some time in the future.
It's estate agency business basically lost its entire worth, and its property development business was again extremely unsuccessful.
I think one has to look at some of the less successful ones and put them into context. Yes, we did have some estate agents, and we and many other building societies have got out of the estate agency business.
It was also rather unlucky in that it decided to go into the derivatives business with Bearings as its partner, a venture which obviously collapsed with the collapse of Bearings.
And overall, what has been the net effect in terms of its performance in financial terms?
Well, perhaps the easiest measure of how well the Abbey has done is to measure it against the Halifax, which is its nearest neighbour in terms of size and style and type of business. If you look at the last 6 or 7 years, the period since the PLC status, the Abbey has probably underperformed the Halifax by about 5 percentage points return on capital.
In 1986, we had no life assurance division, no treasury operation, no presence in Europe.
The Abbey is good at what it has always been good at, making money from mortgage lending. And whatever the arguments were for becoming a PLC in the late 80s, most of them don't apply today.
There's a new bill going through the Parliament that says basically we can do anything we want to do as long as most of our balance sheet is mortgage lending. You would have to want to diversify into German merchant banking or something to violate the rules as present. I mean, I don't know what these building societies intend to do. I said perhaps turn themselves into a merchant bank, perhaps go into derivatives, perhaps become a carpet shop.
But the drive towards becoming a PLC seems unstoppable. The Halifax is Britain's largest building society. It's a successful mutual, and there's no reason why that shouldn't continue. But now it too wants to turn itself into a bank and PLC, and the reasons are far from clear.
In 1992, I'll just repeat it back to you, you said it's easier as a mutual to provide the best in customer service whilst remaining financially strong and fully competitive. Those were your words in 1992.
That's right. I remember saying that. Well, what's happened is that the dynamic of the marketplace has been much greater than I think I imagined it would be at the present time. And also, I became increasingly aware that we were using reserves that had been built up to buttress the savings of our members. We were using them as risk capital in areas where mutuality played no part. Insurance is an example of that, an important example of that. And I felt very uncomfortable with that.
But what is there that you can't do now that you would like to do and will be able to when you're a PLC?
Well, this is there isn't a specific, but this is a question of the dynamic of the marketplace. We know there will be things, there have been things in the past, there will be things in the future.
But I mean, that's, in terms of serving your customers and providing them with personal financial services, which is the business that you said that you're in, that you're not restricted, are you, at the moment?
We are not restricted at the moment, but future changes in retail markets, each change that we might wish to follow requires us to get the consent of our regulator, hence the fact that we tend to be a follower and not an innovator.
But in Nelson, Lancashire, there is evidence that mutual building societies can be innovators and not followers. The Marsden Building Society has assets of £500 million and a strategy for the future. But it sees its future not in exploiting the overcrowded personal finance market, but in its own region, in the less glamorous world of housing its community.
Each area of the country has its own set of housing problems. There's either not enough new housing, or, as in our area particularly, there's a lot of houses that require renovation. And I believe that a building society has a very strong role in promoting home improvement and improvement of housing conditions.
The Marsden has a home improvement agency which provides loans to improve the local housing stock. And it has gone further, buying up run-down houses, improving them and renting them out.
I believe because of the way the population is changing and patterns of work, etc. are changing, that owner occupation may not be as strong in the future as it has been in the past. And for many people, renting a good quality home will become the ideal form of tenure.
The Marsden's careful move into housing development is good business, meets a social need, and is seen by some as a blueprint for the future.
There's a general consensus right across the political spectrum that the biggest housing problem we have at the moment is a lack of rental housing. Why can't we see the building societies becoming involved in the financing of rental housing? They did an extremely good job in kick-starting home ownership in the 1930s. They could do another good job in the 1990s and through to the next century, kick-starting a rental system which benefits consumers.
The Marsden's policy is in sharp contrast to the building societies which want to turn themselves into PLCs. They claim their future is as huge financial supermarkets, one-stop shops, and they can do this more easily as a PLC. The Halifax, with 18 million members, is already well on the way to swapping service to its members for selling product to its customers.
Now, what I'd like to do first of all is to ask each of you to think of 5 key areas that you know about the Maxim current account. And as you know, we also have a special...
Here, Halifax counter staff are being trained to sell a big range of services. Becoming a PLC will enable the directors to expand their one-stop financial shop idea faster. But whatever sense it makes to the Halifax, it's not necessarily good for consumers.
The financial institutions are very keen to persuade consumers that there's a great advantage in having a one-stop shop. All our research shows that you're best off shopping around, looking at the smaller, more specialist building societies and perhaps banks, and buying your specific products from different companies. That's the way you're going to get the best deal, not putting all your eggs in one basket.
According to the Consumers Association, all the big banks are below average in the league table of best performing TESAs, tax-free savings plans. Top of the league is the 26-branch Dunfermline Building Society, another committed mutual. It's hardly a financial supermarket, more of a flourishing corner shop, and that's the way it wants to stay.
We don't want to be a bank, we have no ambitions to be a bank, and we certainly won't be a bank. With those more limited ambitions, with those more limited core products, we don't think that we need to be enormous to be able to succeed at that.
The Dunfermline's business is built on its relationships with its community. Its branch managers even visit customers at home. Janice Davis is going to see an elderly client who needs a small loan. The charity Care and Repair has asked the society to help out.
The loans that the people apply for are very small, sometimes only £2,000. And I have been advised by both Care and Repair and the applicants that they have found difficulty in obtaining funds from financial institutions.
Mary Hamilton is 65. Her house is 100 years old and urgently needs improvement.
The fire only keeps this room warm, the living room warm, so if you go through the kitchen or the bathroom, it's very, very cold.
And what's it like upstairs?
One bedroom's not too bad, because it's above here and the hot water tank's in that, but the other bedroom is cold.
I think she's getting too old to be living here under the conditions she is living in. I think the house is extremely cold, especially with the winter we've just had. There was 2 feet of snow lying here for days. and she was actually blocked in for 3 days. She couldn't get anywhere because the roads hadn't been cleared, and the cold was unbelievable.
Mary's daughter Margaret's first move was to approach several banks to see if she could get a small loan to put in central heating.
We went to the Abbey National Building Society and they weren't interested at all. We tried the Royal Bank, they weren't interested. I seen a bit in a newspaper for financial consultants that could possibly do something. I wrote to them, and they were actually down about London, and they sent us an offer, but they were wanting to take the house over outright, and my mother would have to pay rent for living here.
Enter the Dunfermline Building Society, who agreed to provide a loan for central heating. It will upgrade the housing stock and make a tremendous difference to Mary Hamilton's living conditions.
That's fine. So now we're going to do central heating?
Yes.
You'll be pleased about that, are
Yes.
you? Ah, that's good.
Services like this are not charity. The Dunfermline is a successful business.
As an organisation, we've doubled in size.
Our reserves, our capital, our profits are perfectly satisfactory. We think we're satisfying our members. We think that that, in sum, adds up to a successful business run for its members.
Providing a service for the community may not be glamorous, but it makes good business sense, whatever the fashion may be hundreds of miles further south. Thanks. They talk a different language here in the City of London. It's takeovers, diversification, and participating in the dynamic financial marketplace that gets the pulse racing. But on a sober analysis, the arguments in favour of conversion from building society to PLC are far from convincing. There's no obvious shortage of capital. There's no clear argument that policies of diversification work, and there is no evidence that the consumer benefits. But there is one group of people who look as though they will gain from the end of mutuality: the senior managers and the directors. That's certainly what's happened at the Abbey. Chief Executive Peter Birch was earning £173,000 a year in 1987 when the Abbey decided to become a PLC. Today he's on £450,000. He's also bought shares in the company, now worth almost £1.8 million. Impossible had the Abbey stayed mutual.
One of the arguments made is that the only people who really benefit from the conversion process are the people who run these organisations, and that in the end, all of these other measures really don't add up to a row of beans.
Well, I'm sorry you say that, because it's a popular cult today that everyone tries to knock the bosses and the fat cats and all that they earn and get from businesses. It's extremely difficult and hard work to run an organisation that has a market capitalisation of some £7 billion pounds, to diversify, to manage some 20,000 people, to progress the business forward, and to have all the pressures that one has as well.
Whatever the pressure, the contrast with the Halifax, still a highly successful mutual, is stark. Here, the director's pay as a proportion of overheads has actually fallen in recent years. At the Abbey, it's risen sharply since it became a PLC. And the Abbey's takeover of the N&P may be the first sign of another worrying development for mutual building societies: the danger of hostile takeovers. The N&P board recommended the Abbey deal, but they had not sought it. They knew that Bill Smith was not typical, and that had the Abbey gone over the heads of the N&P directors, most members would take the money and run. Government ministers had not expected a spate of predatory takeovers, and last month suggested a form of temporary embargo to discourage any further such hostilities.
If a building society elects to merge with another building society, that there is some sort of ring fencing whilst they make that decision and whilst their members are consulted. We've also put forward the proposition, which brings it more in line with perhaps company takeovers, that if a takeover has been proposed and the members reject that takeover, then the organisation cannot come back for another bite at the cherry, as it were, within a year.
I mean, they're thinking about ring fencing us whilst we might want to merge. Well, I can't see how that can work. We're going to have to come back to the government with firm proposals, but what is absolutely clear, we do need protection from hostile takeovers. Because we're doing so well, because we're giving the customers such a good price, we're threatening the banks. And the banks, if they can't compete with us successfully in the marketplace, might wish to stamp us out with a hostile takeover.
Ultimately, you know, it's in their own hands as well, because if they can say to their members and prove to their members the great advantage of remaining as they are, with their particular structure, with their members, with their mortgage record, with their savings record, that is the biggest defence that anybody has against a hostile takeover.
But there's a large amount of money flowing into building societies in search of the next takeover. The owners of this hot money aren't interested in the past or the future. Even those who are find hard cash a big incentive to vote themselves out of existence.
People do not vote for the future of their building societies. They're just voting for 500 quid. I know of no other democratic election in the free world where bribery is not only legally enforced, it's actually endorsed by the media. I think it's a disgrace.
And the minister told Panorama that she was concerned about the gathering speed of the PLC bandwagon.
I do worry, certainly, about some of the hype that has been around some of these proposals. I do think that it's got perhaps a bit out of proportion.
The building society movement, a lot of benefit if the whole arguments get back into something that is reasonable, that are properly contained, that are written in a balanced way, rather than a hype that we see in some of the newspapers at the moment.
But the proposals the Treasury is currently considering do not convince those politicians who were outmanoeuvred last time.
It will be a failure. I have read what the government is trying to do, and it will not succeed. First of all, it doesn't stop those who want the changes bribing members with their own money. Secondly, it does nothing to stop hot money moving between one building society and another. And if I could sum it all up, I would say, not only have they bolted the stable doors after most of the horses have gone, but even the existing stable door seems to be hanging off its hinges.
There is more than just sentiment at stake in the decline of building societies. Their mutual status without shareholders has provided a real diversity in Britain's financial system, giving consumers a choice and a better deal. The risk is that the remaining mutuals may be picked off, and it may be that organisations which have served millions of Britons well will have disappeared without trace, without an argument, and without good cause.